Hello traders and welcome to another video review. Today is Wednesday, April 27th, 2022. Let's start with the Forex calendar. Consumer price index data from Australia had been published overnight, and they beat the expectations of 1.7% with the actual reading of 2.1%, which is better than the last reading of 1.3%. This is the data for the first quarter, which means actually that the interest rate hike might be a little bit seriously considered by the Reserve Bank of Australia because of the actual inflationary pressures. Trimmed mean CPI beats the expectations as well, and the weighted median is about to be equal of the previous reading. During the London session, there is not much of the data scheduled for release. We got only GFK consumer climate from the Germany, which is now deteriorating fast to minus 26.5%. During the New York session, we got good trade balance, wholesale inventories, and pending home sales data. At the end of the day, we got the crude oil inventories for all of you crude oil traders. So not really a day with the plenty of the important data releases. However, let's take a look at some of the technical charts. We are going to start with the Australian dollar. Daily time frame chart of the Australian dollar is right now one of the most interesting charts, because recently we got the false breakout above the upper channel line towards the level of 7,662, and this is a one big pin bar. Then the next day we made a bearish engulfing pattern, and as you remember, our analysis showed that we will hit the lower channel line. We did. We got a bounce, then another bearish engulfing pattern, and we fall out of the channel, which is why this channel is now gone. So what do we have here? We can put some trend line here on the Australian dollar, very sloppy trend line. So I can even do some kind of a parallel channel. However, as you can see, even if we do this, the market is already out of the channel right now, and the channel was tested from the downside. So it looks like the market of the Australian dollar is going lower. The market participants are selling Australian dollar and buying the US dollar. Then recent technical support 7,141 was violated. The next target is 7,088 pips and 7,053 pips. This year low is from the 28th of the January, located at 6,969 pips, and it's still in reach of bears. Please notice the fact that we are trading already into the extremely oversold conditions, right? So we just, after this last push down towards the lows of the 7,120 was made, in the same time we hit the extremely oversold market conditions. So some kind of a bounce, some kind of a consolidation is still expected. However, please don't be very surprised when we reverse and head lower, because it looks like the market wants to test this low of the end of the January. So the outlook for the Australian dollar is rather negative. What is going on the euro dollar? Let's take a look. The euro dollar is going lower. The euro dollar is going way lower than we originally thought. We are still trading inside of this downsloping channel. This channel is right now more than it will be. It is more than 20 minus 10 9 months longer. So at the end of the May, it will be the whole year. So it's a very important technical pattern, very important technical tool for us, because it is long in time, and right now it's being tested. This is the low of the pandemic sell-off, pandemic panic, and this is the low of the beginning of the post-COVID rally. So the level of 1.0639 had been violated. 1.0626 is the current level, but we've been lower today. We've been at 1.0616 already. So the downtrend, despite the fact that we got on the daily time frame chart bullish divergence here between the momentum and the price, which is making new lower lows, doesn't want to spike up. However, please notice the fact that after so many months of trading down, we need some kind of a bounce. So please be careful with basically keeping your trades to the sell side for the extended period of time, because it looks like we will have a bounce sooner or later, maybe more sooner than later. This is what I mean. The same situation is on the British pound and the American dollar. This is the popular cable daily time frame chart. We are heading towards 61% of the Fibonacci retracement, 1.2503 into the extremely oversold market conditions, and this level 61% is the big retracement level of the whole post-COVID rally. So please notice the fact that we are approaching, or we are already at the very important levels on two major pairs, euro dollar and cable. So if we want bounce from this level 61% on the British pound, or from the technical support of the post-COVID rally on the euro dollar, the degree of damage done by bears might be way bigger. However, let's take a look at one more market. This is the US dollar index, to see what is going on here. And as you can see, the long-term chart is showing us that we broke out and tested and then continue to move higher from this channel, ascending channel. We are approaching the high of the post-COVID panic. So this is the time when everyone was buying US dollar. 102.97 is this level here. Is this high? Apparently it's 102.92. There you go. So this is the high. But there is one more, 92, 98, 97 was good. Okay, so there is another high at 103.81, which is, as far as I'm considered, the high from the 2017, right? So this is, I'm trying to find out the current level. 2017 is long time ago. Was long time ago. 103 point. Let me just zoom in back in. Because I want to find the correct level. This is the high, I guess, 103.81. There you go, exactly what I had on my chart. So 103.81 is the high from 2017, and we are approaching this high. So please notice the fact that it's only 140 pips missing from this high from 2017, and then there might be some sort of correction on the US dollar index. So we might be consolidating, we might pull back a little bit, which means euro dollar will go up, British pound will go up, and what will happen with the US dollar to the Japanese yen? It will finally maybe go a little bit lower. Right now, euro dollar to the Japanese yen, as you can see on the daily time frame chart, moved lower out of this supposed to be triangle. However, it moved lower because of this bearish divergence. So far we made only like a 2%, 2.4% of the correction. Let me just be more clear about 2%, 1.90 exactly is the current correction on the US dollar to Japanese yen. However, this trend up is really strong, but it's getting it's sending some kind of a signals of exhaustion, bearish divergence between momentum and the price, and now this kind of a consolidation corrective pullback pattern here, which is the longest since the beginning of the March, means that maybe there is some kind of a distribution going on here on the levels of 128, 129, right, between these two levels. So maybe we will not hit the round number of 130 soon enough. However, we are high enough for this bull trend to start some serious correction. Okay, so it looks like the trend on the majors are still continuated, right? However, we might be very close to the correction on all of the major markets. This is my point of today's analysis. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.